Hello and welcome. My name is Gianpaolo Avanzo and I am the CEO of Crown Consultancy Services with more than 30 years of experience as CFO and senior SAP consultant. Today, I'm going to present a financial model that may differ from most of the models shown over internet. Many of the Excel financial models you can find or build set assumptions such as sales growth, fixed assets utilization, cost of goods sold percentage increase, and so on, to name a few. What if, instead of considering these as assumptions, we consider them as deliverables? We set basic assumptions, more familiar for a small or medium business, such as how many products or services I plan to sell and at what cost. What would be the cost of product components, labor, and overheads? How many people I plan to hire or dismiss? And what would be the related cost? And so on. Let's see how this approach is managed in an integrated financial planning model developed in Excel, capable of supporting complex financial scenarios. This is the ProfitQube architecture, which is the visual representation of the business processes and displays the functions of the organization. ProfitQube is made of 7 modules: sales, production, trade, long-term assets, overheads, financials, and reporting and KPIs. An additional consolidation application is available for groups that need to consolidate subsidiaries or legal entities at parent level. The application is structured on 52 sub-modules that correspond to the worksheets for the activities of input, calculation, and output. Today, we are going to formulate a plan for a multi-business organization that manufactures and sells finished products, buys and resales finished products, and delivers services. The organization is structured around 3 divisions: production, trade, and services. This is our 5-year plan scenario roadmap. We will start defining the organization settings, then load historical data, that means previous year balances, proceed and plan sales quantity, mix and prices, forecast production costs, plan production capacity, volumes, and make-to-stock or make-to-order strategy, and assign absorption method. We then proceed and plan finished products and vendors capacity in the trade division. We plan overheads and personnel costs, general overheads. Then we input financials such as banks, interest, and income tax. At the end of the input, we will have the first outcome as income statement, cash flow, balance sheet, and all KPIs and charts indicators. We will then proceed at the second phase, changing the scenario. We will increase production by increasing the capacity. We will add labor by adding overtime and proceed with the disposal of obsolete machine and purchase new machine. So at the end of this second step, we will again analyze output such as financial statement charts and KPIs. Extract the following files from the zip. ProfitQube desktop app. README first file. The user manual that provides all the details, including this scenario detailed guidelines. The appendix folder with support files. Double-click ProfitQube to launch the application. The Open Data File dialog appears. Select New. The file name plus the date is suggested. Select OK. Then select Open to open the application. It might take a while to open Excel by the encrypted file depending on your computer. The end user license agreement is presented. Accept and proceed. Let's then go to the menu. The menu is made up of 3 areas: knowledge, input, and output. Each area includes modules and functions for the input, calculation, and output. Bottom left, there are service functions. Reset to initial settings, which sets parameters to initial status. Set workbook input to 0 for previous financial year, which sets to 0 all data for previous financial year. Set workbook input to 0, which sets to 0 all data for the planning financial years. The check button to go to the summary of various information, such as income statement, balance sheet, cash flow, and control checks. The buttons allow the user to move across modules. Each function module contains buttons to navigate within the module or to jump to other relevant modules. It also contains buttons to set input to 0 for previous financial year and planning financial years of the module itself, or to copy the month or period 1 from period 2 to period 12, and to copy year 2 from year 3 to year 5. These functions streamline the input and save input time. The data can then be changed specifically. As you have seen, when double-clicking on a cell, the row and column are automatically highlighted, improving visibility of a large grid. Data validation Excel function is used to restrict the type of data or the value that the user selects or enters from the drop-down list. The click-to-go function improves the navigation speed, taking the user immediately to the selected object or period. Let's close the file and create the new file for our scenario demo. Save the changes. We clone the original file, which we keep as backup copy, and create the file for Scenario 1 Part 1. select clone and change the name with the extension S1P1, and now open the file. For better visibility, I'm going to View and unflag the formula bar, and also auto hide the ribbon. Let's go to menu. We need to set all data and parameters to 0 to start our new scenario. These parameters are in settings, which are those that you find when you upload the app the first time. They are in previous financial year. And they are in the planning financial years, which are disseminated in the function modules. You will find them in the gray area, the gray columns. So we will now reset to initial settings with this function here. Then set input to 0 for previous financial year and for current financial years. These activities will take a while. I will show the message for the first one, which is the same for the other two. That's the message. You just select yes. I will then run the 3 activities offline and proceed with the demo. At the end of each run, a confirmation message will appear. This scenario is described in Chapter 8, Getting Started, of the user manual, including data and parameters. The current financial year is the 2018, and the scenario covers the financial years planned until 2022. The company and events depicted here are fictional. Let's go to the menu and select Settings. We start with the input of the company code and company name. The starting financial year is January 2018. Currency is euro. We now enter the production products, those that the company manufactures, that are running shoe 1, and the process is discrete, and running shoe 2. The process is also discrete. We then enter trade products, those products that we buy and sell, that are mountain shoe 1 and mountain shoe 2. We also deliver services which are educational 1 and educational 2, and so on. We will complete the input offline and move forward to the next activity. We will then input the closing balances of the previous financial year, 2017, together with other parameters. This data must be entered in the relevant function modules in the previous financial year area, the gray columns. For instance, for the long-term assets in this area. And in the function module, historical data, previous financial year, in this column. Let's start with the long-term assets input. For the asset class startup information, we have one asset that has been entered in the settings. We proceed entering the values from the previous financial year, acquisition and production cost closing balance for 15,000, and accumulated amortization closing balance. We also assign useful life in years. We proceed entering, for instance, tangible assets. We have two lands. Again, these were entered in the settings. For the land 1, the acquisition cost is 30,000. And for the land 2 is 23,500. The land 1 is assigned to production because it's the land where the plant has been built, and so on. Again, refer to the Chapter 8 Getting Started of the user manual for all the relevant information about the input of the previous financial year. As usual, I will complete the input offline and move forward to the next activity. Proceeding with the input of the previous financial year, we go to the previous financial year function module. To the section of the balance sheet. We have already entered the long-term assets in the dedicated function module 500 LTA, and they appear here in the balance sheet. We now enter other data, such as accounts receivable, other receivables, share capital, accounts payable, and so on. Refer to the Chapter 8, Getting Started, of the user manual for details of the data input. I will complete the input offline and move forward to the next activity. We proceed with the planning of the 5 years, starting from the sales production. The company prepares the sales plan in units. The management plans sales unit for year 2018 based on the previous year 2017. Applying a 10% flat quantity increase. There is no sales order backlog to carry forward from the previous year. I recommend to set the formulas calculation options as manual and calculate at the end of the input with F9 to improve the input time. Refer to Chapter 8.1.9 Sales Production of the user manual for details of the data input. I will input the first month for both products and use the functions copy input period 1 to period 2 until 12. So after quantity percentage increase, I'm going to input unit price, payment days, and VAT percentage. For the product 1, and product 2. Now I apply the copy function. Alright, so we have the first 2 products input ready for the year 2018 for both products. Let's now go ahead and input the following years. After the input in sales production domestic, proceed to input export, then sales trade domestic and export, and sales services domestic and export in the same way. Refer to the chapter 8.1.10 and 8.1.11 of the user manual for details of the data input. We go then to production domestic and check the capacity planning section here on the right. As we can see, we have shortage quantity for all the months, basically, and the future years. This is because we have to plan capacity in production and also allocate the machines. Referring to chapter 8.1.12 capacity planning, we plan now the production output. Let's go to capacity planning. Production machines were input in previous financial year long-term assets in previous activity. We then assign the department and the production line to each machine. Machine 1 and machine 2 belong to department 1001. Machine 3, machine 4, and machine 5 belong to department 1002. Machine 1 and machine 2 are parallel machines, so each machine produces shoes, while machine 3, 4, and 5 are in a serial system, so they work together to produce shoes. So we assign the serial system to the three machines. We then fill capacity, downtime, and quality rate. I will proceed offline with the input of the other machines for capacity input, downtime, and quality rate. We have now entered all the data for the 5 machines. Let's proceed and assign each product that are running shoe 1 and running shoe 2 to the department. So running shoe 1 is manufactured in department 1001 with machine 1 and machine 2, while running shoe 2 is manufactured in department 1002 with the serial line. In this scenario, the production department 1001 and 1002 are dedicated 100% to the production of the shoes. So they do not produce other products. We then assign machine hours allocation 100% to both. The company is adopting the strategy make to stock. So let's go here on the right and assign overcapacity, which can be either utilized to manufacture for stock, so make to stock, or not utilized for make to order. In this scenario, we assign 100% for make to stock. I will do the same input for year 2019 offline. This is the year 2019, where we have now the same data as per January 2018. Once entered values in January 2018 and year 2019, we use the copy input function to extend these inputs to the other periods. So we then start copying period 1, that is January 2018, to period 2 until period 12. First thing you can notice, we don't have anymore the message that the machines were not assigned, the red one. Let's do the same for the year 2 and copy year 2 from year 3 to year 5. Let's now jump to any period just for check. For instance, to July. As you can see, everything is populated. And for instance, in year 2022. Everything is populated. Let's input now the product cost for production. We enter a flat 10% cost inflation increase and populate the bill of material for direct materials, direct consumables, and other direct costs. We enter the same values for running shoe 2. Refer to chapter 8.1.13 of the user manual for details of the data input. We input the same values for January 2018 and for the year 2019. Once entered values in January 2018 and year 2019, as usual, we use the copy input period 1 to period 2 and 12 function, and the copy input year 2 to years 3 and 5. I will do this offline. We then populate personnel production. We enter flat 10% cost inflation increase. We then populate direct labor, indirect labor workers, and indirect labor employees. We copy the same values from the worker number 1 to the other workers. Refer to the chapter 8.1.14 of the user manual for details of the data input. As usual, we enter same values for January 2018 and for year 2019. Then we use the copy input period 1 to period 2 until 12, and copy input year 2 to years 3 until 5. I will do this offline. We then populate overheads production. We enter the flat 10% cost inflation increase. And then we populate tools and consumables, subcontractors, utilities, communication, and general production expenses. Let's do the first one. Then refer to chapter 8.1.15 for the detailed input, which as usual we are going to extend with the copy input period and copy input year function. I will do this offline. ProfitQube adopts overhead absorption costing method, where costs are assigned to unit of product irrespective of their nature. All fixed and variable production costs are absorbed in the production. As the overhead expenses are indirect expenses, the absorption is to be made on a suitable base. The base is the overhead absorption rate, which is calculated by dividing the overhead expenses by the base selected. Refer to Chapter 8.1.17 of the user manual for further details on the absorption method. In our scenario, we set the direct labor cost absorption method, but we can also use many other different absorption methods, or even no absorption, which will apply a direct costing method. Let's go back to product cost. We still miss one input, that is the split of the absorption cost between the two products. So let's assume that 55% goes for the running shoe 1 and 45 for the running shoe 2. Do this for all the periods and the year. Let's now make a calculation with F9. See that I made a mistake. I didn't put 55 but 50, so a message is coming there saying that I'm shortage of 5%. So let's put 55 and do it again F9. Now the absorption is 100% split between the two running shoes. Let's now go to trade product cost and inventory of the trade division. Trade division needs to forecast products' purchase cost and vendors' supply capacity. The company has signed agreements with preferred vendors, which must guarantee an effective supply of products when needed. Let's then populate mountain shoe 1 and mountain shoe 2. We enter values for unit cost, VAT percentage, vendor payment days, and vendor quantity capacity. We enter the same values for the following months. So we will now calculate with F9 the result, and we'll see that the over-under quantity capacity will change values according to the vendor quantity capacity we have entered in this column. Right, so almost all the months and years have enough capacity to support the trade sales domestic and trade sales export plan. Refer to the chapter 8.1.21 for detailed input and information. In this scenario, we input selling variable costs for commissions paid to agents for export sales in production. So let's go to production export function modules and enter following percentages for commissions. We then copy these values to the following periods and years. Overheads administrative expenses are fixed costs and refer to sales administrative and marketing, research and development, and general and administrative. Let's go to overheads. We enter a flat 10% cost inflation rate increase. And following values for sales, administrative, and marketing. Refer to chapter 8.1.22.2 of the user manual for details of the data input. We enter as usual the same values for January 2018 and for year 2019. Once entered values in January 2018 and year 2019, we copy values to following periods using the copy input functions. I will do this offline. We enter now non-production personnel. Let's go to personnel. These are the departments for non-production personnel: sales and distribution, sales, administrative and marketing, research and development, general and administrative. We enter flat 10% cost inflation increase. And following values for sales and distribution. Refer to chapter 8.1.22.3 of the user manual for details of the data input. We enter same values for January 2018 and for year 2019. Input yearly cost both in each month and year. Once entered values in January 2018 and year 2019, copy values to following periods using the copy input function as usual. I will do this offline as usual. Other expenses such as interest expenses need also to be estimated. We go to function module banks and enter following percentages for interest charged and interest received. Refer to chapter 8.1.23 of the user manual for details of the data input. We also enter income taxes in the function module income tax. Let's enter following percentages in each period. And hit F9. You will get the income tax amount. Refer to chapter 8.1.24 of the user manual for details of the data input. The management will analyze the income statement to verify if the plan meets the expected sales, costs, and net income growth. We go to function module income statement. I will now group the income statement offline to summarize the main information in this way. In the first instance, management is interested on main items such as sales, gross profit, operating profit, and net profit. The aim is to project a steady increase in sales and net profit for the 5 years. Due to capacity shortage, the management decides to increase capacity planning. Refer to chapter 8.1.25 of the user manual for details. Management will now analyze the cash flow. We go to function module cash flow direct. I will now group the cash flow offline to summarize the main information in this way. Due to the production capacity shortage, management decides to plan investments in additional capacity. A positive cash flow for the 5 years plan supports the management's decision of investing in 2 new production lines and increase production personnel overtime to satisfy the increased demand. Refer to Chapter 8.1.26 of the user manual for details. We are now at the scenario change and will manage to increase capacity in production, to add direct labor overtime, to dispose of obsolete machines and buy new ones with increased capacity, and finally, we will analyze, measure outputs and KPIs. We close ProfitQube and save the changes. We then clone the file scenario 1 part 1 and create scenario 1 part 2. Just select the file and click clone. Then change the name. We then open the new file. To have 2 files, one for part 1 and another one for part 2, will be useful if we want, for instance, to export deliverables from part 1 and part 2 for comparison. We will see this later. Back to our scenario part, we now have to increase capacity, and management decides to run overtime of 2 hours for parallel system in department 1001 that produces running shoe 1. Let's go to capacity planning function module. Refer to the chapter 8.1.27.1 of the user manual for details of the data input. Production department 1001 is running 2 shifts. First, add 1 hour per shift for machine 1 and machine 2, from 8 to 9 hours. We will do this for the year 2019. So we go to the year 2019. And we change in hours shift from 8 hours to 9 hours for both machines. This will satisfy the demand for the year 2019 and maintain a safety inventory quantity. Let's check this in sales production domestic. For the year 2019, we see that we have a shortage in quantity. So we now hit F9 for recalculation. And you see now that quantity is available and can support the sales planning. This will apply both for domestic and export. We can now, for instance, export the worksheet for comparison if we have also exported previously the same worksheet for part 1. By clicking this, we can create a separate file for analysis. We will do the same for serial system in department 1002 that produces running shoe 2. Let's go to the capacity planning function module, year 2019. And for machine 3, 4, and 5, we change from 8 hours to 9 hours. Let's check in production domestic for running shoes 2, the year 2019. We have a shortage in quantity. We now hit again F9 for recalculation, and the quantity is now available. Same applies for export. Refer to the chapter 8.1.27.2 of the user manual for details of the data input on department 1002 producing running shoe 2. The increased production capacity requires to add labor overtime hours for year 2019. Direct workers involved in overtime hours are 5. Let's go to function module personnel production. To year 2019. And add the overtime. So we add first the total year cost overtime per head. And then the working days per year overtime. Refer to the chapter 8.1.28 of the user manual for details of the data input. The combined increase of sales for additional capacity and direct labor cost for overtime will impact the profit, and then we are going to check how much. So net profit and loss for the year 2019 is currently 503787. Now we, as usual, hit F9. And the new profit will be 612498, which satisfies the management requirements. The years 2020 until 2022 still display a capacity shortage, both for running shoe 1 and running shoe 2. Let's go to production domestic sales to double check. This is the shortage for the 3 years. The management decides to sell old machines and buy new ones to increase capacity. We go then to function module long-term assets. We select tangible fixed assets and machinery and equipment production. We go to year 2020. And we enter the following values. for machine 3, 4, and 5. Machine 3 will be sold for 5,000 euros, machine 4 for 10,000 euros, and machine 5 for 10,000 euros. With these customer payment days, and this VAT percentage, this will result in a gain from disposal of 25,000 euros because the machines are fully depreciated. Refer to the chapter 8.1.29.1 of the user manual for details of the data input. A third parallel line machine will be purchased for running shoe 1, machine 7, and a new serial system, machine 8 plus machine 9, will be purchased for running shoe 2 to replace the disposed one. Let's go to settings to enter the 3 new machines. Let's go now to function module long-term assets again. And we enter following values for machine 7, 8, and 9 in year 2020. Let's hit F9. So we have 3 machines, the new one appearing, and we go to input, acquisition cost for these values. We assign useful life. and vendor payment days. And also VAT. We go now to function module capacity planning to year 2020. Capacity planning is now changed and displays disposed machine number 3, 4, and 5. And purchased machine number 7, 8, and 9. I will put values to 0 for machines 3, 4, and 5, and input values for the machine 7. Refer to the chapter 8.1.30 of the user manual for details of the data input for the other machines and for the copy to years 2021 and 2022. These are the values after the input. You notice that machine 8 and machine 9 are in a serial system. I will now hit F9 to recalculate the worksheet. You see that the messages disappeared, and now we have full values output for machine 7, 8, and 9 for the 3 years. Let's check 2021. And 2022. We go to function module sales production domestic. The increased capacity supports the sales forecast for 2019 until 2022. And the same applies for production exports. We can have a look at the income statement. The income statement satisfies management's expected sales and also net income growth. Let's have a look to cash flow direct, for instance, which satisfies management's expected levels of cash flow for the 2019 until 2022. Let's have a look now to ratios and KPIs. The ratios and KPIs analysis satisfies management expected levels for development and growth, profitability, productivity, solvency, efficiency and liquidity, financial structure, and operations. We can have a look to the charts, for instance, see how the sales are moving. And we make, for instance, comparison between different products, how they change according to the period. And so on. We have other charts. We can have a look to production, for instance. Or let's say gross profit analysis. Maybe we can have a look to the summary, the dashboard. Which gives a comprehensive view of several indicators and trends. Last but not least, we can go to check, which provides a summary for income statement, balance sheet, cash flow direct, plus warning indicators and various informations. I trust this demo was of interest for you. Please like, subscribe, share and comment with any financial issue, questions or suggestions you have for me. And stay tuned for next videos to watch how, with the help of ProfitQube, we will analyze other scenarios. You can find the link to download the free ProfitQube version here below and how to get 10% discount on full version. ProfitQube is available in 5 versions: Production Pro, Production, Trade, Services, and Consolidation. Download your ProfitQube today. Thank you for watching, and see you soon.